Hey everyone, so today let's just ignore the day-to-day price charts for a minute because there is a much bigger story unfolding beneath the surface. We're talking about a fundamental Bitcoin supply squeeze that's been building for years. So let's get into it.
All right, let's just cut right to the chase. The amount of Bitcoin that's actually available to buy on exchanges, it has just hit its lowest point in 7 years. 7 years. You can see it right there. It's been dropping pretty consistently since 2020. And honestly, the trend is only getting stronger. So that leads to the obvious question, right? Where is all of this Bitcoin actually going? Is it just vanishing? Well, no, the answer is way more fascinating. It's not disappearing, it's being pulled off the market on purpose and locked away into private storage by some very big players who are in this for the long haul. So first up, let's take a look at who these accumulators actually are, because this isn't just one type of investor. We're talking about a really diverse group of buyers who are all playing the long game here, completely ignoring the short-term noise and just steadily scooping up whatever supply they can get their hands on. And this group of buyers is just incredibly broad now. I mean, we're not just talking about those classic crypto whales anymore. Nope. Now you've got publicly traded companies, huge financial institutions, hedge funds, and even some countries getting in on the action, all looking for something outside the traditional system. And check this out, we're seeing a massive shift in attitude from the big institutions. For a while, there was this worry that major index providers like MSCI might actually punish companies for holding a lot of Bitcoin. But they just came out and said the exact opposite. They will not be kicking these companies out of their indexes. That is a huge green light for other corporations to jump in. The investment is also getting way more sophisticated. It's not just about buying and holding Bitcoin anymore. Now you've got tech giants like NVIDIA, the company whose chips basically powered the early days of mining. They're now investing directly in Bitcoin mining companies. They're placing bets on the long-term infrastructure of the whole network. And this strategy isn't just for the mega corporations. We're seeing smaller public companies, like a Spanish firm called Venati Coffee, doing the exact same thing. They're just consistently buying and holding Bitcoin. It just goes to show you this is a widespread trend that's happening at literally every single level. Okay, so we know who is doing all the buying. But the next really big question is, why now? Well, as it turns out, there are some powerful forces in the global economy right now that could basically act like rocket fuel on this already burning supply squeeze. Think of it like this. For the last few years, the world's central banks have been in what's called tightening mode. That means high interest rates, making money expensive. It's like they've turned the global money tap almost completely off. But now, we're seeing the first real signs of a huge shift. They're starting to turn that tap back on, a process called easing, which is going to flood the system with cash that's looking for a place to go. And you can literally see that shift happening on this chart of the US Federal Reserve's balance sheet. See how it's been shrinking for a long time? Well, look at that bar on the far right. See how it's starting to tick back up? That's the first expansion we've seen in 4 years. And historically, when that happens, assets, everything from stocks to Bitcoin, tend to do really well. And yeah, this quote from the source material just sums it up perfectly. QE is when the money starts flowing into investments. So when you combine this coming rush of new liquidity with a Bitcoin supply that is already sitting at a 7-year low, well, that dynamic becomes incredibly powerful. So we've got a shrinking supply colliding with expanding liquidity. For our third point, let's take a look at how this pressure is actually showing up in the market data, if you know where to look past all the daily noise. Okay, we're going to look at an indicator called the RSI. Now, don't worry, you don't need to be a technical expert to get this. All you need to know is that it basically measures market momentum. And when that reading drops below 30, it's a signal that an asset might be oversold and is maybe due for a bounce. And for Bitcoin, this indicator has been unbelievably significant. The data shows that the last 5 times Bitcoin's RSI dipped down into that oversold zone, the price, on average, doubled afterward. Now, of course, past performance is no guarantee of future results, but wow, that is a powerful historical pattern that shows buyers tend to get very aggressive at these levels. And that really brings us to the main takeaway here. All the daily ups and downs, the 5% corrections, honestly, they can be a huge distraction. The much bigger story, the one with real lasting implications, is this fundamental trend of a continuously shrinking, incredibly scarce supply, meeting ever-growing demand. So when you put all of these pieces together, you've got the constant buying from huge players, you've got the global money tap starting to turn back on, and you've got these market signals flashing, what you get is the setup for a classic textbook economic showdown.
On one side of this conflict, you have Bitcoin's supply. It's absolute, it's fixed by math. There will only ever be 21 million, and that can never, ever change. And on the other side, you have global demand from people, from companies, from institutions, which is, for all intents and purposes, potentially infinite. And that leaves us with the ultimate question that this whole situation forces us all to think about. What is the end game here? What happens when a potentially limitless wave of demand collides head-on with a provably finite asset that is being locked away faster and faster every single day? What happens when the supply is just gone?